If you've clicked in, that means you've built a ton of equity in your home and you're now house rich but cash poor when it comes to retirement. If your home is your retirement plan because it's worth 5 or 6 times more than what you paid for it, you may be wondering, how can my home fund my retirement? There's pretty much only 2 strategies you can use to unlock the wealth sitting in your home to help you pay for retirement. Watch this all the way through though, because depending on which route you go, it could mean more or less money in your pocket. Before I tell you the 2 strategies, if you want to learn how to maximize your money, we teach you everything you need to know right here, so subscribe. The first way to take advantage of your home's equity is a reverse mortgage. There are pros and cons of taking out a reverse mortgage though, which I'll tell you about in a bit. But here's how it works in general. A reverse mortgage is a loan that you take out on your home, similar to a second mortgage. Homeowners are eligible to borrow against their home's equity with the reverse mortgage and withdraw cash. In this case, you'd use that cash to pay bills and fund your lifestyle in retirement. A few pros of the reverse mortgage are, you can get one without making any monthly payments. You can also receive the funds in a lump sum installment, a series of payments, a line of credit, or a combination of all these. And you don't have to pay back the loan until you move out or you sell the home or you die. There's no cash call on the loan. So as long as you live in the house, you basically don't have to pay it back. So in plain terms, that means that if the house loses some value, the bank won't call you looking for money. Now for some cons. Like any loan, a reverse mortgage comes with costs like origination fees, closing costs, and interest. Some good news about this con is that the fees won't need to come out of your pocket, but the bad news is that those fees will eat into your equity, which can make your loan amount smaller. Another con is that you must be 62 or older in order to apply for a reverse mortgage. So if you plan to retire earlier than that age, you're going to have to wait. You may be wary of seeking out a reverse mortgage because you've heard some bad press around them. It's true that in the past, reverse mortgages were predatory and caused some people to get kicked out of their homes in their 90s or their elder years. But that all changed in 2008. Realizing that many people were in the same boat of having their life savings tied up in their home, the federal government stepped in to improve the regulations around reverse mortgages. From 2008 and going through 2014, regulations were enacted to make reverse mortgages a safe and effective way to tap into the equity sitting in your home. If you like the idea of a reverse mortgage, here's some other details you should know about how they work. Number 1, the amount of money you can borrow with the reverse mortgage depends on your age, the interest rate on your loan, and your home's value, which can fluctuate with the housing market. Number 2, you're not legally allowed to take out a reverse mortgage for more than the value of your home. Now, after hearing all the details, there may be one last question in the back of your mind. How does the loan get paid back? Well, the answer is probably simpler than you think. When you die, your kids or beneficiaries must sell the home and give the proceeds to the bank to pay off the reverse mortgage. While the reverse mortgage can be a great option for those looking for simplicity, I know that the thought of adding additional debt can get some stomachs turning out there. I'm talking to you, Dave Ramsey fans. So the other option is to sell your home and move to a state where your dollar can go further. Let me give you some details and walk you through an example of how this is going to work. So let's say you bought your home for $100,000 back in 1990, and over the years you've done some remodels and some improvements. Maybe you've spent about $150,000. Your adjusted cost basis in this example would be $250,000. So that means that whatever price you sell the home for minus $250,000 is your capital gains. Now you'd pay taxes on all of those capital gains. But when you sell, you get to take advantage of the Section 121 exclusion. So if you've lived in the home as your primary residence for 2 out of the last 5 years, the Section 121 exclusion applies to you and helps lower your tax bill. You get to shield $250,000 per person from taxes. So a married couple can shield $500,000 of gains from paying taxes. In the example I just gave, with the adjusted cost basis of $250,000, let's say someone sells their home for $1 million. A married couple would get to take their Section 121 exclusion and add it to their adjusted cost basis to give them $750,000 that's excludable from taxes. So on a home sale of $1 million, they would only be taxed on $250,000 of gains. And this is taxed on the lower long-term capital gains rates, not the higher ordinary income rates. So let's recap. If your home is your only retirement plan, you pretty much only have 2 options: reverse mortgage or selling and moving to a lower cost state. If, after hearing both options, you're a bit torn on which one to choose, I have a way to help you decide. Your decision can be made by asking yourself, How important is it to age in my home during retirement? Once you determine that, the answer will be clear to you. As an advisor for over 20 years, I've helped many people make decisions about what to do with their homes to help them plan for their dream retirement. It's a big decision and it shouldn't be made lightly. This is where we come in. If you need help with the decision-making process, please get in touch with me by scheduling a meeting using the link below. Or if you're near me in Carlsbad, Encinitas, or Oceanside, stop by the office. I'd love to see you in person for a cup of coffee. We love answering all the retirement questions, big and small. Also, make sure to like and subscribe to the channel and share with anyone who you think can get benefit from it. Word of mouth is really helping the channel grow. See you on the next one.